Okay, so let's go through the answer of the trade management question on the previous page. So how would we manage this trade? We've got our entry marked out, and the rules for this trade is that the stop is placed 60 pips away, the break even is when we're in 70 pips profit, and the target is determined by trading by pivot lows after the break even point. So where would you place your stop? The stop is to be placed 60 pips away. So our entry is at 121.93. So with the currencies, it's either 2 decimal places or 4 decimal places that we pay attention to. So in this case, it's 2 decimal places. So you have 121.93, and 60 pips away would be 121.33. So around about this price right here. So our stop will be in this vicinity right here, which is 60 pips away. So as you can see, our stop will be placed at the 121.33 level. Our break even is when we're in 70 pips profit. So for us to be in 70 pips profit, going up from 121.93, 70 pips will be 122.63, which will be around about this price right here. And as you can see, the red line is at 122.63. So when price gets to 122.63, we will move our stop from our original stop to our entry price, meaning we have broken even. So when price gets to the red line, we will move our stop as shown from the original stop price to the entry price, meaning we have broken even. Where would we exit our trade? Well, the target is determined by trailing by pivot lows, after the break-even point, of course. So after this price right here, we want to look out for pivot lows. So as we go along, we see that our first pivot low is right here, because we have a higher low to the right and a higher low to the left. So if this low is broken right here, we would exit our trade, but it doesn't get broken. So we carry on looking for our next pivot low, and we see that we may have a pivot low here, but these two are at the same price, so there is no pivot low there. We carry on looking for a pivot low. We still don't get one here because these two are at the same price as well. We still don't have a pivot low until this low of the green bar right here. Now this may not be very clear because we're trying to show where we would exit the trade. So if I just go back to the first slide, we'll be able to see this pivot low. So as you can see, this is a pivot low because we have a higher low to the right and a higher low to the left. So as you can see, this pivot low is broken by the blue bar 3 bars later, and that is where we would exit our position, when the pivot low indicated is broken. So what's our risk reward here? Well, let's take a look. We already know that our stop is 60 pips away. Therefore, our risk is 60 pips. What about our target? Well, we come out at around about this price here, which is in the vicinity of around about the 123.33 area. Our entry is 121.93. So the amount of pips between our entry and our exit is 140 pips. So our reward of 140 pips divided by our risk of 60 pips is just over 2 to 1. So I hope you're understanding trade management more through these examples. So let's go through another one now. So please continue over to the next page and we'll go through another example.